Hello and welcome to another update video about FET. FETCH.AI is currently hovering around $1.24. We are still holding our support there, micro support. I'm going to zoom in a minute. First of all, looking at the bigger picture, the current thesis is that the pullback into the August lows was a wave 4. But as a complex WXY correction, it's not a great pattern because first of all, the third wave was a bit weak. And it actually looks a bit like a 5-wave move down. It's not great, but I'm considering it still, due to the overall chart context, as a 4th wave. We did hold the 50% retracement, which is quite good and actually quite important. So I would really prefer that the August low isn't broken anymore. I mean, if it is, it might still create a lower wave 4 as per the alternative, but actually at the moment, look, if it forms another low, it might just be a B wave. But if it goes below the August low, it's probably a reset of this wave 4. But then key support below the August low is 52 cents. I mean, below that, I haven't got anything reliably bullish left. But for now, I mean, FET is deep in a support area now on the micro level. So we want to take a look at that. Provides a good reward to risk ratio there. Doesn't mean it has to hold. It's a pretty ugly pattern from the August low. I have to say that. I mean, it's not great. I'm considering it an A wave. We are possibly completed already the B wave, and we have possibly started the C wave. I don't know if that's the case. It's a pretty ugly pattern, right? But we have higher highs, higher lows, and then a somewhat corrective looking pullback, which reacted where it needed to, because we could identify an A, B, C structure to the downside. And the C wave actually had 5 waves here when the November low hit and turned around. And then the move to the upside, yeah, can be considered a 5-wave move, right? That's the idea. Can be considered a 5-wave move. And then here a 3-wave corrective pullback. So, but is it really a corrective pullback? I mean, first of all, the 5-wave move up is super ugly. And the 3-wave pullback, I can't really see clear 3 waves unless I really have an overshooting B wave here. But then the low should be in, well, not yet, but nearly, right? All I'm saying is this is a 1-2 setup that we could explore. It's not high confidence, but we have a support area to watch. We've got $1.18 as next support. Below 118, the invalidation point will likely be tested. It's at $1.09, $1.08, no, $1.09. It's low risk, high reward. That's all I can say, right? And that's really what it's about. We have not only the previous swing lows here, also here there's a swing low. But it's a possible 5-wave move up, even though it's not the cleanest. And to say it in very simple terms, the bulls should turn up here. Well, if not, then the pattern will be invalidated and the trade idea is gone. But the main purpose of these setups is to understand where reward is high and risk is low. Now, typically before the price turns around, I mean, it's still a knife catch. We're still falling. We're still in a downtrend locally. So it doesn't make sense to be aggressive yet, I'd say. But once we see a good reaction to support, I mean, this is the time to be active, right? So I'm not confident that it's going to hold, but as I said, good reward to risk ratio, and we should overall get into the $4 region, right? With maybe even with this A wave. But if not with the A wave, then possibly with the C wave, even into the $6 to $7 region eventually. So yeah, what can I say? Risking a few cents for a few dollars, it's pretty good reward to risk ratio. However, it typically doesn't make sense to focus on such a high reward to risk ratio because you will not take any profits then. It makes sense to maybe focus on 3 to 1, 4 to 1, which is more realistic, maybe 5 to 1. But yeah, that's the idea. So the pattern is clear. Okay, what happens if we break below the $1.09 level? It's likely a reset of the B wave, which could still happen, but that wouldn't look great. It really wouldn't. I wouldn't really know what this is. I mean, it would. The risk is we would then attack 75 cents, maybe even 52. I don't really see another alternative. I mean, yeah, because this is quite an aggressive move up. That indicates it's a setup for lower if it breaks support. I would need to think about it, but for now, I'm watching if the bulls turn up. That's the important question. Do the bulls turn up before we break below $1.18? And okay, 118 is not the invalidation point, The invalidation point is the $1.09 level. So that's what I'm watching. It starts to get choppy down here, so maybe like a small wedge pattern is forming there or something. So definitely something to observe. That's all I can say. So that's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.